This week, how will a Trump presidency impact home prices? More after this short message.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. Today, housing is generally unaffordable for most would-be middle-class home buyers. The silver lining is that these elevated home values have actually helped millions of homeowners tap into a larger portion of their housing wealth. As the key interest rate, which is used in part to help determine the federally insured reverse mortgages loan proceeds that are available, or the 10-year constant maturity treasury rate, it remained below 1% through most of 2021 and below 2% throughout 2022. Consequently, existing reverse mortgage borrowers returned to refinance their existing HECM loan to access more money. The bad news is that macroeconomic forces, such as massive economic stimulus and low post-pandemic interest rates, have created an untenable distortion in the housing market that remains today. And that's concerning, as the housing market accounts for 15 to 18% of the U.S. GDP, or gross domestic product. All this begs the question, how will the Trump presidency in 2025 and beyond impact the housing market? That all depends on which economic policies the Trump administration decides to enact first. Realtor.com chief economist Danielle Hale told Newsweek, despite a strong mandate from voters, the impact on the housing market remains a toss-up. Lawrence Yun, chief economist and also senior vice president of research for the National Association of Realtors, or NAR, said, if government spending can be restrained in combination with the tax cut or the economy booms, then the Federal Reserve cuts will make a bigger impact on lowering mortgage rates. Government spending may actually see monumental reductions. That is, if the newly formed Department of Government Efficiency, or DOGE as it's commonly called, follows through on its promise to dramatically downsize the federal government, cutting trillions of dollars in spending. If seen as successful, it could positively impact the market perception of the U.S. economy and potentially lead to lower long-term Treasury rates. However, another potential outcome of the incoming Trump administration has raised concerns about the underlying infrastructure of the U.S. housing finance and mortgage market, changing just how the government-sponsored enterprises Fannie Mae and Freddie Mac are managed and financed. In his first term, the Trump administration attempted to remove both of these agencies from their government control and conservatorship. And if they succeed in Trump's second term, the result could upend the mortgage market and real estate industry. It's really a question of not so much whether, but how the change gets made, said Michael Frantoni, chief economist at the Mortgage Bankers Association, in an article in the Washington Post. And the Post notes, economists and housing experts say that the government has to be especially careful not to reshuffle the companies in a way that raises uncertainty or spooks investors, with mortgage rates already high and affordability at a crisis point. These concerns may be warranted, as Freddie and Fannie guarantee approximately half of all U.S. mortgage-backed securities, and both government-sponsored enterprises, or GSEs, came under the control of the federal government in 2008. That's when the Bush administration nationalized the agencies amid the great housing and financial crisis. Also, investors who purchase mortgage-backed securities from Fannie Mae and Freddie Mac may insist on higher interest rates if there is no government guarantee. That is, if the Trump administration succeeds. In other words, the federal government supports the housing market financially and also reverse mortgage lending. What will the housing market look like in the coming years? Well, it'll depend on just how quickly and drastically the Trump administration chooses to proceed. Now, what are your thoughts? You can leave your comments in the comment section below. And also, if you'd be so kind as to share this week's video on LinkedIn, thanks to each of you that do that. And we do have a YouTube channel where you can subscribe and hit the like button if you found any value in today's episode. Each and every week, we bring you the most recent reverse mortgage related news in our weekly podcast, HECM World Weekly. We have both an audio and a video edition. Listeners can find us on Apple Music and Spotify. Thank you so much for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find here at HECM World.